Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Andy Swan. He's a co-founder of Likefolio. Welcome back to the show, Andy.
Happy Monday.
Happy Monday to you. So, we're discussing ON Holdings. They've got earnings tomorrow morning ahead of the open. And, I was pretty surprised over the last couple of months. This stock's really taken a beating. I mean, it's still up 55% this year, but they had an investor day earlier in October, or actually, October, I believe, just about a month and a half ago. It seems like everything was pretty positive. They kind of reiterated guidance, but this stock's taking a little bit of a hit. What kind of data do you have?
Yeah, you wonder if, the stock just kind of got ahead of itself because everything from a core business perspective is very good. And I think a lot of times that happens. It can be very frustrating for investors, to watch a stock pull back on good news. But like you said, this has been a winner all year long. This is a stock that, here at Likefolio, we've been bullish on. We continue to be bullish on, although our tone is getting a little bit more cautious, because essentially this is a fast-growing company, but we don't think it's growing quite as fast as it was earlier this year. And sometimes those, that difference between expectations and reality can be, a real bummer for investors and for the company. Overall for ON Holdings, consumers love this product. This is one of the highest rated athleisure companies that we have in terms of consumer happiness. Very, very high ratings from consumers. The other thing that we love about this company is that its direct-to-consumer channel is growing very rapidly. In fact, we see web visits up 55% year over year. I think in the last quarterly conference call and in that investor day, they spoke to a 55 or 54% revenue increase in their direct-to-consumer channel. And so we see that as a very, very strong sign that this company is building a brand direct with consumers. That means, higher margins and a really satisfied customer. So, overall for On Running, we see this company is doing very well from a corporate growth perspective, but from a Wall Street perspective, it seems like that growth may be slowing down a little bit from stratospheric levels. So going into this earnings report, we're cautiously optimistic and long-term bullish.
Andy, I look at this company and I see what Under Armour was at the beginning of its history, right? And how they kind of got off their path. On Holdings seems to be staying on the premium brand path, and their growth, and they're about to go to China with a bunch of their growth. So is this company, when you look and for a while there, Under Armour was the premium brand for clothing, for workout clothing. This one went right into shoes real quickly, and they're everywhere, Andy. 10,000 retail locations. They get 50% of their revenue from the U.S. They get 45% from Europe, only 5% from Asia. Andy, this is an incredibly popular shoe that you see everywhere and everywhere. Is it just a matter of time? As long as they don't have any major missteps, shouldn't this be a long-term hold here?
Yeah, I really think it is. I think they've got incredible international expansion opportunities. They've kind of already proven themselves in one of the toughest markets in the world, and that's the U.S. and North America. And they've proven themselves at a premium price point. So I think that's a fantastic spot to be. They're expanding from shoes into, athleisure wear. In fact, they have a jacket that's over $400 that's selling really well that people like. And so I think they've done a good job of defining who they are, sticking with it, continuing to make customers happy, going direct to the customer, and now they're going to expand that to an international landscape. So I do think that there's a lot of reasons for the company to be optimistic about the future on this conference call that they have tomorrow.
Yeah, Andy, I used the same running shoe for about 18 years, and I finally switched after the couple times we talked about this stock before, and I wanted to try them out. They are amazing, but they're expensive. They're expensive. Yeah. Is that the key for this company moving forward is that they don't pull, like Kevin said, they don't pull an Under Armour and start putting things in discount stores, lowering price points. Yeah, you might sell more, but your margins start shrinking, and you don't have that luxe, you're not creating that brand, that luxe brand. Is that the key for this company moving forward? And do you have a rating on this one going into the earnings?
Yeah, I think that's exactly the key. I think that, sometimes when things get tight for the consumer, the companies tend to overreact in the short term and dilute their brand like Under Armour did. I would say, if I'm on running, I'm looking more at the path, the life cycle, of Lululemon. I think that's the better pathway for them. That's the better comparison point for this company. I hope that's the path that they choose. In terms of the earnings score tomorrow, we're plus 29, which is, bullish, but not thinking they're going to blow things away. I think that last quarter reset expectations, and now the company's ready to deliver on those or even exceed them a little bit.
Yeah, we haven't seen that pull back in Lululemon either, like we have in ON Holdings. All right, great stuff, great data. Andy, have a great day.
Thank you, you too.
All right, that's Andy Swan, co-founder at Like Foley.